Hi guys. I cannot see any of the comments if anyone is in here. Can someone comment? Can you guys comment here? I don't know if you guys. Let's see. Why can I not see the comments? Oh, you guys are commenting? That's so strange. Sorry, guys. I don't know what is going on. Oh, I see it. Yep, I see it now. Hi, guys. Okay, I was freaking out. What's up, everyone? Happy Sunday. Sorry. Sorry, I had to restart it. How's your guys' weekend? Oh, you guys are all sending me the photos here. Okay, thank you guys. Yeah, I don't know what was going on. Hello, hello. Sorry, I was freaking out. Hi, George. Is Zeus in here? I want to see if she's in here. Because I know she was asking me some questions, but I hope you guys have had a good weekend. I honestly haven't checked anything. Last week was really whack. I took one good trade on Monday, and then hi Joel, and then like Tuesday, Wednesday, break even, and then I didn't even take a trade on Friday. What's up, Joe? But I do think that this week will be a lot better. Let's look at Forex Factory. First, okay, so we do have a lot of news. We have FOMC meeting minutes. The meeting minutes is not that big of a deal. FOMC, yes, it is, but when it's meeting minutes, it's not really eventful. Hey, OB, hope you're having a good weekend. Hi, Debbie. So yeah, meeting minutes is not that big of a deal. You're not gonna see crazy action. Unemployment claims Thursday, yes, you guys already know Thursday is gonna be a volatile day, and then GDP Friday is going to be major because GDP is important, and the PCE, PMI, those are important. So I think similar to last week, I'm thinking Tuesday and Wednesday might not be eventful, but Monday, Thursday, Friday will be. And I mean, tomorrow is President's Day. So, hi, Mariah. So, just that's another thing. You can trade President's Day. Oh, what's up, Emil? Hello. Okay, everybody's in here. You can trade President's Day. I can even back test it with you guys just to see how it'll be, but I don't think it'll be anything crazy. Let me see if she's in the chat here. Oh yeah, Zeus isn't on, but as far as President's Day, yeah, we can back test that and check it out. Um, Now let's look at the weekly. The weekly is extremely bearish. You see, we formed this doji here. The doji candlesticks, they're important on every time frame. But the higher the time frame, the stronger the move. So this doji candlestick here, that would have been great for swings. And I'm telling you, these doji candlesticks always indicate reversals, especially when they're at a major high and a major low. Same thing here. Doji, price ended up selling. Now in this case, this doji, see, it's not always going to be exactly that. And in this case, this doji was at a high, but price didn't reverse. It actually continued. So they'll indicate continuations and reversals. In this case, this is bullish. So I could see why that was the continuation. But regardless, we're pretty bearish. We did not close below this wick. So if we were to start closing below this level, the reason why I'm doing it here is because I'm not doing it at the wick. I'm not doing it here. I'm doing it here because that's the most recent body, candle body. And in general, this is like the median. So it's also pretty close to this wick here. But yeah, this is always like that's how I backtested it. That's how I have backtested in the past, where as long as I mark the levels to the body of the wick, and price breaks below it, then that'll be my confirmation that we will want to continue selling like that. Or this could just be a support level like it has been in the past. This was support. This was support. We broke above this level, so it could do that as well, but we're still ranging. We've been ranging for a really long time. Hey, Issy. Is doji the ones with equal wicks? Yeah, dojis, these are the dojis. Like, they're pretty obvious. They have long wicks. Sometimes they're not equal wicks, like you said, but they just indicate indecision, reversals. Like this is a doji. They have specific names, but I don't remember the specific names. That's like a lot to remember. I just know that if I see a doji at a major high or a major low, that price will likely reverse. And see, you can see it here on the daily. All these doji candlesticks, what do they have in common? They're just at major highs and major lows. And they often are the beginning of the sell or bearish move. So yeah, on the daily, same thing. We actually close with the doji, so this should be interesting. We really want to see how we open, if we open up bearish or if we push back up to continue this bullish move, or we can break below these lows and continue bearish. Regardless, we have to break out of this range, and this range really starts from, we can say from here to here. This is the range that we've been in. We kind of, in November, we kind of broke below it, but this was a liquidity sweep. This just wanted to take out these lows here, and we ended up pushing higher. Hi, Britt. So yeah, as far as the overall like direction of NAS, it's just, we're just ranging. We just want to wait till we get out of it. So when I'm marking my zones, I'm going to do it, I always do it where price is currently at. This is the most recent low. So this is the first area that I'm going to start marking my zones up. And I'm going to do this low here, and I'm actually going to do this high over here up top. Okay, this low is a support area. We keep closing above. We haven't actually started trading below. We did kind of on Thursday, but you see here we started forming this long wick, this long rejection, followed with the doji, and we ended up pushing higher. So that's what I'm gonna mark right now, just on the 4 hour and the 1 hour. And let's see how big this is. Oh, that's so big. I can make it smaller to 30 points. Yeah, that's like 30 points. Okay, and then I'm also gonna do this high. And these zones are important because that's where we are right now. I don't want to do it too far. If I don't have this high, then I might miss out on a move. Now, when we zoom in, we actually see that these are major imbalances since Thursday. So when you see long engulfing candles like this and no wicks are covering, this wick is actually kind of covering this body. So I would still consider this an imbalance and still an area where price is likely going to want to come back and fill this area. Whenever we have imbalances, we don't fill them right away, but at some point when price starts trading towards that area, we're likely going to at least fill it to here. When you see moves like this, you always want to mark it to where the previous wick was. This is something that I learned. There's some people that trade imbalances differently, but it will at least fill to that area. Now, it doesn't always fill completely, and I don't expect that price will necessarily be bullish. But if we were to start, if we were to start trading above this zone, then I know at least we're going to fill this area. To use the SMT strategy, I don't remember. I don't know. There's so many different SMT, SMC, ICT. I don't know. I learned smart money concepts, but I don't know if I learned the SMT strategy. You might have to elaborate on it for me because I kind of forgot. It's been so many. But yeah, as far as the zones, the next zone that I'll have here is also down below, in case we do start trading bearish. And so that's all I want to mark. I don't want to have anything else. Like you guys see, every Sunday I delete everything and I remark everything. I'm not remarking the zones every single day because sometimes we're still in the same area. But I just do this out of habit. I'm not overthinking it. It's just like a routine for me that I already know I got to do these areas because they're just major areas that price is likely going to go and react off of. But it's just as simple as that. Now, as far as when we go down on the 5 minute and we start marking key levels, which is what I would do, the key levels are just the guidelines for where you want to be entering and exiting. I mean, even just this level here, you see at this price level, this is where we closed. And price has reacted here multiple times. What I don't like though is that it's kind of in between these zones, this zone and this zone. So I'm not necessarily going to enter or exit off that. I'm just showing you guys where a level could be marked, where you just get multiple retests. Now in this case, when market opens, like I said, we always want to see if there's a gap. And since we closed bearish, I would assume that we are going to have a gap. and open up bearish. Now in that case, if we open up bearish and we start selling, I want to see if we start holding below 659. Oh, the SMT divergence when two correlated markets move differently. Yeah, I've heard about that. I've seen a lot of people do it. Now I've looked at, haven't done it recently, but for the longest I would look at ES and NASDAQ at the same time, and if I saw that they were both moving very similar, then that would just be a high probability trade and I would have more confidence taking the trade. So but I've seen people like mark out this, that section middle is for stop loss limits where correct. I don't know what you mean by section middle. Oh no, like this level that I marked, basically if price comes here and we start closing below this price level and we retest it, that's where I want to enter. Because a lot of people have, like, the reason why I use the levels is because a lot of people, they don't know where to actually enter in the zones. So basically, if I start seeing that we finally have a candle closure below this price level, this tells me that we're likely going to want to continue selling. And the same thing for buys. Now this is riskier. Why? Because we're in the middle of the range. But if price started trading above this level, well, if you look left, you see that this has also been resistance. Price has retested this area multiple times, so it would be a good entry area for buys. Yeah, Elitsa. Yeah, I know. I've seen people like they mark out. They do like, oh, they mark out the highs and they put SMT. I've seen people do that. I've just never practiced it, but I do know for a fact though that if you look at ES and NASDAQ at the same time and they start moving the same way, then that's just likely going to be a high probability trade. But as far as marking the levels right now, this is what I would have marked. I don't know what to expect with this market open, considering that we have the holiday tomorrow. But for now, this is safe to have just to see if we are actually going to start trading above this level or below. And in this case, like if we were to continue selling, I'm just going to look left and I'm going to see where is the next major low. I usually don't do it by wicks. I usually will just see where I've seen multiple retests, like in this case. You could even do it actually a little higher. You see how price came down here. We retested multiple times, support. This became resistance. Same thing. So this could be a level that I could see price reacting off of, or just confirmation that if we start closing below this area, then that tells me that we could continue selling. And this is about almost 100 points from 100-point distance. So that to me is fair. Either that low, maybe I don't want it that close. Maybe I want to wait for extra confirmation. Then I would just do it at the wick here at level 493. That's another area that I would mark it at. But in general, I don't want it to be too far. So this level here at 553 is fair. If we start trading below it, then that would be my confirmation that we want to continue selling, and or we could just get a reaction off of it. So I don't want to have too many levels marked, usually like 3 to 4. Maybe these levels won't even get a reaction. I just want to see first how price will likely open up. But as far as how the week could go, we really want to see how we open up. If we open up bearish, I do think that we could at least get a reaction down here into this zone. because we have been retesting this area multiple times. But you have seen how lately with news, the market has been so sporadic. Like there hasn't been a true trend. But the major moves, if you notice, have been bearish moves. So that's something to take note of. To notice that overall, the biggest moves that are happening are consistently bearish. Now, if you look at, I'm going to save that here because I know he mentioned the S&T situation. But if you look at the chart on ES, it's very similar, almost identical. The only thing with ES though is that ES is not going to have it's not going to move as much, and it's not going to have the same volatile movements. Let's actually, if you guys didn't know, you can actually split your screen. If you click here, you can make it into two charts. So I'm gonna put NASDAQ, sorry. I just have this random indicator, okay. So see, this is on the 3-minute, the NASDAQ is on the 3-minute, and then ES is on the 3-minute as well. You see, they look almost identical. They are pretty much identical. So that's why when they're both doing the same thing, if you see that ES is looking bearish, then you can take a trade on both. The only thing is though that ES is worth more per point. So ES is going to be worth $50 for 1 mini per point move, whereas NASDAQ is $20. Because again, it doesn't move as much. So if you're trading with ES, your take profit and your stop loss is going to have to be different as well. But I actually think it's great to be looking at both. I know that's something that a lot of people that trade Forex do. People that trade gold, they look at the dollar, they look at silver. And so if you want to add, you're welcome, Joel. Yeah, so that's the thing. It's because SPX is ES, it's going to be the same. Now, SPX I think might be for options or futures, but it'll look the same. It's just when you're looking at a Forex chart, the price might be a little bit different, and depending on the broker, because with Forex there's different charts depending on the broker that you're using. Then it will look a little bit different, but that's the nice thing about futures is that everybody's trading the same chart. Everybody is trading NQ, NQ1 or NQH, whereas with Forex, everybody's kind of trading Oanda, Black Bull. Yeah, so if it's, oh yes, Leslie, you trade options, I remember now. Yeah, so it'll be very similar. The only thing with options from what I've observed, and like I had told you, I learned to mark the levels actually from somebody that trades options. Because with options, you have to be more precise with your entries. It's not like with futures or Forex where you can kind of just enter randomly if you just start seeing a candle look bearish. But with options, because there's so many variables, you can't really do that. You need to be more precise. But yeah, it'll look very similar. But since I haven't traded options, I can't say too much on that. But yeah, that's if you guys want to add another confluence to your trading, this is another good confluence to add. Now, sometimes you're going to see that NASDAQ is not looking clean. And sometimes ES is actually going to be a bit better to trade. Not always, but let's see here. Sometimes one pair might move more than the other. So you see this move here, ES did 46 points. But if we measure it from the top here, from this low, 51 points. And if I measure it from here, around here, see, it's 200 points. So that's the difference you're going to see, is that ES is going to move less. But if you're trading one mini 50 times, that's still like a $2,500 move just off one mini. Whereas with NASDAQ, it's 4,100. So it's almost double. So that's why I always like to recommend ES for beginners, because you're not going to experience like that crazy the crazy speed that NASDAQ moves at, and you can still make a lot of money. But just calculating the TP and the stop loss would be a little bit different. But yeah, overall, you guys can see, like, if you start seeing that NASDAQ and ES are moving similar, in this case, let's see here. Oh, I remember this day. Okay. This was Thursday. So here on Thursday, you can see for NASDAQ, we have these long wicks. We had this major rejection off this resistance level. But with ES, there's not really, it doesn't look the same. We didn't have these doji candlesticks. It actually just started selling right away. Maybe this long wick just to retest this high. But we started selling right away. We did get a little bit choppy afterwards at 940, 950. But same thing here. It happened a little later for NASDAQ. So they're not always moving like identical, but overall similar direction. If you just see that it's a pullback on ES, you can have that, use that as a confirmation for NASDAQ as well. And yeah, as far as news, Friday's the only day that you can expect like crazy movement. And then also it's always good to look at like what they're forecasting and what it previously showed. They're forecasting a lower percentage than previous. So they're forecasting already like negative, they're forecasting a negative outcome already. Just gathering from what they're from this. So that's another thing to like keep in mind. Do any of you guys have any questions? This is like a pretty chill analysis, since it hasn't been a very eventful trading week. It doesn't have to be anything related to the charts, but yeah, even crypto hasn't been doing so much. But yeah, as far as the levels, another thing you'll want to see too here is if we start trading below this low. You see how I don't do it at the wicks? I'm just doing it at the body. 24,741. I want to see if we finally break out of this area, because even when you zoom out, you can see that price kept trading really choppy around here. We just want to avoid all that. Where could I paper trade NQ in what session? So you can paper trade here on TradingView. Let me show you. Dang. Usually, for some reason, there's going to be like a little dash down here. And when you click that dash, it'll give you the option for all the brokers. And it'll say paper trading. In this case, like I already have it set. So see, I have, maybe you don't have that. Like it's not showing how my chart is looking. But if you double click here on the settings, you're going to want to go to trading, and you can click buy, sell buttons and one click trading. And then if I just randomly click that button sell, I can activate paper trading. And now I can paper trade. And that's how you want to do it. Can you please explain trailing stops? Okay, so basically I'll show you right now as an example. Let's do this sell. Okay. All right, so let's say I enter on the sell. Once price breaks below, it's retesting this zone. I know it's intimidating because you just see a lot of choppiness, but you also have to remember that the market moves in phases, and this is actually a distribution phase. When we reach a high after we have been uptrending, because this is an uptrend actually here. After we've been uptrending, we will reach distribution, and when we finally make a lower low and then a lower high, and then we continue to make a lower low, that is the start of the sell. That's the start of the bearish move. So let's say I enter sells here. I'm going to enter 2 contracts. So the stop loss would be 30 points. So let's do it right there. Okay. This is mini, so that's like really big. This is like a really big move. Oh, actually I did 50 points. Wow, my math was off. Okay. So just imagine that that's 30 points. When I'm in a trade, if I already see that price, okay, now that price broke below, it retested a little bit with this doji candlestick, and then we have this bearish candle. I'm going to go on the 1 minute because that's on the 5 minute. On the 1 minute, it's clear that we broke below. We didn't retest entirely because, I mean, if you look, you already see that actually we started trading below here. We retested. We finally got that break below. We almost retested the zone, but not entirely. So at this point, I'm not going to leave my stops. I'm not going to leave it at my stop loss. I'm actually going to move it to break even. Okay. Now, some people use trailing stops and they are continuously moving their stops as they're in the trade. I'm not going to do that because NASDAQ is sometimes crazy and we need to give it a little room. So once I have seen that we're, like in this case, this is already 50 points in profit. So you would want to at least move your stops to break even. And the reason why, it's up to you if you want to leave it a little bit in profit. But see how price broke below and retested? If I had left my stop like around here or even a little bit lower, I would have been stopped out. And that's where people get frustrated and they're like, oh, I ended up being break even. That's just your choice. You know, you either move it to exactly your entry or a little bit in profit. In this case, if we get another confirmation, another bearish confirmation like this, this is where I want to move my stops, if I can even move it. Okay, this is where I want to move my stops to here. Okay, I'm not going to necessarily move it down all the way down here. Why? Because this candle itself is actually an imbalance. So I know that we could still come back up and retest and continue the bearish move. So that's why, again, I said it's up to you. But when you're doing the trailing stops, you want to do it at the highs and the lows. In this case, if I see that price starts trading above these candlesticks, we're no longer bearish because this is the most recent low. These are the most recent lows. So if we're selling and we start trading above here, that tells me that this bearish move is short-lived and we're not actually going to continue selling. Does that make sense? Aaron or anyone, whoever is actually, if you guys are following along, let me know if that makes sense, because we don't want to, and that's where sometimes you will get hit with break even, and that's why it's just something that you have to like accept. Most of the time I will move my stops to at least here, a little bit higher than this wick, because see, like we do pull back to fill a bit of that imbalance. And let's see here. Okay, once you see that price, same thing. Once you see that price break structure, it breaks below this low, that's your confirmation that we want to keep selling and that this was just a pullback and not a reversal. So that's when I can move my stops lower, and I'm going to do it to here. Okay. And Aaron, yes, question mark for Top Step. TPT, do they let you hold trades from day? No, you can't hold trades, Mariah. A lot of futures firms will not, actually, all futures firms will not let you swing trade. Okay, see, now I could move my stops down here because I'm getting confirmation that we keep selling. And I'm also not getting myself stopped out. I'm maximizing my returns. But that's why, like I said, if this is a clear pullback, why? Because we are still trading below this low, this low, this low. Okay, that's why I marked the levels. This low right here. You see how price has retested multiple times, and it's clear that this is support. So that's a pullback. But if we were to have another bullish candle here, that's a reversal. That's no longer a pullback. Or maybe it's faking me out and price could still continue selling. But regardless, that's where it would be invalid. So let's see. Okay, see, now I got stopped out. But you see how it perfectly retested this level, 852? Why? The levels aren't anything crazy. The levels are just me marking out the highs and the lows. So I could actually still be in this trade if I had let my stop loss be a little bit higher. That's why we don't always want our trailing stop to be right at the level. We want it to be a little bit higher because chances are the candlestick is actually going to retest that level perfectly. So yeah. So that's like a really good example as to how you can like trail your stops. I hope that helped, Aaron. But it's nothing crazy. Just you just have to keep in mind that you have to mark out your highs and your lows. And as long as we keep breaking that low, what does that mean? As long as we have a strong candle closure below that low, we're Gucci. We're fine. That means we're going to continue the trade, the trend, and all that. Yeah, like you could have, as long as you use the levels, you could have still been in this trade. Because you see, pullback didn't reverse, didn't start trading above. Now this is where, let's see. I know I'm just back testing. I can actually close out of this. Okay, you see how this candlestick now, you see how we came down here. We started trading higher. We finally broke above this low that I had. That lets you know that, okay, you want to close your trade. Actually, retested here. This low. It retested perfectly. So yeah, whenever you're managing your trade, you just have to keep in mind, give yourself a little bit room. But once you go in profit, like once you're over 30 points in profit and there's a lot of volume, momentum, what that means when there's a lot of big candles forming, move your stops immediately to break even. That's how I avoid a lot of the losses. You would leave the TP where you entered and you just kept moving the stop loss. Yep. Yeah, Ashley. So at that point, let's see. Okay. For this trade specifically, like if we zoom out, this is crazy, ugly, choppy price action. But we want to know, like if we're taking sells at the top at a resistance level, price is more than likely, and especially when we have this pattern, when we're uptrending and then we start forming this distribution here at the top, we're more than likely going to reverse and drop all the way down to the next support level. So yeah, in this case, I mean, I would just keep holding the trade and keep trailing my stops once I see how the lows are forming. And as long as we keep breaking them, then I'll continue to hold the trade. It's okay, Zaya. You're fine. Um, so the big move at 9:30, sometimes it's best to not even trade it. Um, oh, Zeus, that's you. Okay. Hi. Okay. Awesome. I'll check out your question again. But to answer your question, at 9:30, sometimes you don't actually even want to trade at 9:30. Like there's specific weeks where 9:30 has a lot of manipulation, and the best time to trade is 10 a.m. So this week was like a perfect example. It's not something that just because you miss a 9:30 move does not mean that you're going to miss any good trades. There's actually a lot of good trades after 9:30. I'm just I'm just sometimes like I just want to be done already. Market opens and I already want to be over it. I just want to be in and out. So sometimes it's a flaw. Like it's not always good to be that way, as you have to be patient. But as far as 9:30, it really just depends on where we are on the chart. Let's see here. Okay. 9:30 here on Friday, okay? This level here probably wouldn't even have been marked, but I'm just going based off this major candlestick, the body of it. Once we start trading below, it's safe to take the sells. Actually, I think I may have taken this trade, and everybody was like, what the heck? Oh no. See? This is why you don't want to trade right at 9:30. There's like I remember this. There was no clear direction. This major doji candlestick, when you see candlesticks like this with long wicks, that just indicates major rejection. But you see, when there's a bullish candle like this and then immediately a bearish candle like this, that just indicates that it was a fake out. That price was just manipulating. If we look left here, these are all imbalances. Remember I said imbalances have like no wicks and they're just like big candles. These are imbalances and they get filled. So this got filled. Didn't get filled all the way, but it did get filled. And then we continued selling because that overall was like the move that I wanted to do. But you see how this level is at a major support area. So as long as we start trading below, that indicates that we're going to continue selling. So same here. It's our past 9:30, like 9:38. That's when it finally started happening. We had this nice candle, bearish. We retraced a little bit, pulled back, and then we continued. You want to be entering at some point here or here. No later than here. Because the moment you start trading below this zone, that's where you have to accept the risk that it might be a little bit of a later entry. Even though it's valid and it's good, but considering like this day, the market was already had a lot of manipulation. When you guys see that the morning starts off like that, you just will naturally be a little bit defensive for when you take a trade later that day, because there was already a lot of indecision. So yeah, like I remember this trade. Yeah, see, it completely reversed. So that's why I said that when we actually break out of these zones, if we have not been trending and we've been ranging, when we start taking trades outside of the zone, that's where it gets riskier because price wants to keep ranging. We do what we do. So yeah, so that's why this week, like if you were trading outside of the zone, sometimes it worked out, sometimes it didn't, only because we kept wanting to be in this range. So yeah, that's just something to like keep in mind. But really, there's like no secret to trading at 9:30. It's just more so when you trade at 9:30, if you see that there are confluences aligning, 9:30 is going to have a lot of volatility. Sometimes you win, sometimes you get cooked. Maybe you might take a unnecessary loss and you have to re-enter. Like, there's been times where I've had to re-enter. It's just something that I accept. But that's why I've learned, especially when you have a funded account, just to trade like 3 micros. Because I'm giving out multiple entries, I know that I can take multiple trades throughout the day. I know that I'm not just finding one trade. I more than likely will find 2-3 trades throughout the day if I wanted to. So that's why it's okay to just trade with 2-3 micros. You can accept that you're risking less and you might make less on a trade, but if you're taking multiple trades, it adds up. And that's why it's always safest to just trade with micros. All right, Zeus. I'm gonna check your question out. It's okay. Okay, so you said, let me see here. Okay, the VIX, that's what you were talking about. I've never heard of VIX. I have no idea what VIX is. Okay, wait, you said, I'm curious because I noticed that whatever the VIX does, NAS does the opposite. Well, first, let me find this VIX. What is, will it just be spelled out, VIX? Is it this? CBOE volatility? Whoa. There's nothing. Oh, but what you were looking at was on Forex. Hold on. VIX. Nope. Don't find it there. Can you type the name of the chart? US volatility. Oh man. Okay. Oh, okay. Let me add this maybe. Or is it G26? Let's see. If anybody knows the actual chart, could you please let me know? I think this one might be it. Okay, and then what you said, I'm curious because I noticed they do the opposite and there are a lot of imbalances currently sitting at the bottom of the VIX. And it's up in a rejection zone. I'm thinking because of this, it'll continue upwards and get rejected at higher time frame. Fair value gap come down to correct these imbalances, which tells me that NAS might come down a little bit more to correct to 46.20 and 45. Wait, 24. Oh my gosh, my dyslexia. 24.620. And yeah, I definitely do think that price will, at least, I do have a feeling price will continue bearish, at least until the first few days of the week. But let's see. Oops. Yeah. VIX and options. Oh, I had no idea. I had never heard of it. But when you're using like another, like if you're using VIX, you can mark it up like you do with NASDAQ and do the same analysis. Like I would still mark on the 4-hour, okay, this is a previous area where we have continuously traded at. Same down here. This is the next area that I would mark. Yeah, I mean, it closed very bullish. So it would only make sense that we continue pushing higher. But as far as your analysis, it'll continue higher time frame fair value gap. It's okay. I think it's best to what we know. She's like, this is just something that stood out to me from videos. I feel like the more we add, yeah, I would like. That's one thing that I've learned as well, is that not to overcomplicate it. But that's why I said you want to look at ES and NASDAQ at the same time if there's something that you want to see correlates. I've traded US 30. I couldn't really do that with US 30. That's why I liked trading ES and NAS, because I knew that both of them correlated. And so that was like extra ammo for when I take a trade. But as far as VIX, yeah, I've never used it, and I can't say that I'm confident about this. Because even looking at this chart, yeah, it doesn't really give me much. Let's see. Nope. It doesn't really give me much. The only thing that I would say, if you want to be looking at confirmations and you already know that these don't correlate and it does the opposite, then what I would do is just that if I were trading at 9:30 New York Open or whenever you trade, if I see that it has a lot of volume, that VIX has a lot of volume and it's moving in a specific direction, then that's how I would use it. But as far as analysis, that's where maybe I would not I wouldn't necessarily focus so much on the analysis part of it. I would just focus on, are they currently doing the opposite or not? Because I used to do that too when I would trade Forex, and I would look at the dollar and I would see, okay, the dollar is not correlating and it's not moving in the same direction, and it's going in a specific price. But that's where you could overcomplicate it if you start analyzing how this is moving more so than NASDAQ. Because the reason why I have a lot of confidence in my trades is because I've looked at NASDAQ every single day. I have already like a relationship with NASDAQ. I've developed like an intuition. A lot of experienced traders have that same experience. Maybe there's a trader that specifically only trades gold and that's what they excel at, but it's because they've studied it so much. So if you feel like you're scared to take trades, it's just a number of there's so many factors. It's because you feel like you've been losing on your trades, or a lot of the times people, they just have learned so many things and now it's like everything works. All of the strategies work. It's just about making a plan so simple that you don't even second guess yourself when you're going to execute that plan. So we go together. Yeah, exactly. So thank you, Heather. Oh, guys, it was Heather's birthday. So happy birthday, Heather. I hope you had a great weekend. I hope you had a great birthday. Yeah, it's just, there's so many things that you can learn, and all of those things are great. I know, Zeus, you had said that, like, you kind of, you had learned supply and demand, and that kind of like overwhelmed you. That's kind of how I felt about supply and demand as well. So that's why I just kept it simple with support and resistance. So in the past, I don't know what the prop firm, but personal, I blew one to, yeah. And then a lot of that too is like asking yourself if maybe, because once people get funded, oh, sorry, let me read a, Sorry guys, I have to read a message. Once people get funded, that's when they like, get very excited and they start thinking like, oh, let me get another account, or um, like they already start planning on maybe focusing on a actual cash account, or they want to get more multiple accounts. But there's nothing wrong with actually just focusing on one account for a while and just getting used to getting those payouts and being consistent with that. And so I think that's what like also sets a lot of people off, because like the hard part in the beginning is understanding trading, and then the second hard part is actually being funded, passing a challenge, or making at least, like if you have $100 cash account, making at least up to $200, making double what you invested. So after that, it's keeping your funded account, or not even keeping your funded account, because at some point, even when you get payouts and when you are funded, you're not going to always keep the same account forever. Like that is an insane discipline, and it's not also realistic, because sometimes there's glitches in the market, sometimes there's glitches with the platforms, sometimes you just you're off and you're not trading consistently. But so it's like there's levels, right? And when you can accept like what level you're at, and you can just embrace it and focus on that, just know that as long as you little by little focus on whatever phase you're in or whatever level you're in, then that's fine and you'll continue to progress. But it's like part of it. You're not always gonna keep the same account, because that would be crazy. That would be hard. And it's not realistic as well, because there's, like myself, like I have gotten my payouts and gotten funded, like I'm profitable and everything, but even then it's like there's still phases where you might not keep the account, and there's multiple people that are like that. Doesn't mean that you're never gonna do it again. It just means that you just gotta get up and do it again. It's like it's just normal. It's not something that you need to really stay stuck on. But yeah, as far as like making your own trading plan, if you're still scared to take trades, you just have to like make it as simple as possible. I'm only going to take a trade if this happens, if X, Y, and Z happens. Like, I'm not looking at too many things. I'm not over complicating it, just because I know I'm already a natural overthinker. And I have to be strict with myself as well. But yeah, sometimes it's just about focusing on one account, and you never know how big you can build that account. Um, you don't need to have multiple accounts to make uh, good money. You don't. You can actually just do it with one account. And also like putting a limit on yourself on how much you spend with the prop firms. Like that's an important thing, because it's okay. Like you people don't think about this with trading, is like, how much did I pay for a challenge, and uh, what payout can I at least get from it? If we pay $100 for a challenge, then I know that if I'm getting a payout, if and when, I at least want to make my $100 back, whatever I invested in. I at least want to make $200 back, because the same thing with trading. We're always aiming for a 1 to 2. I'm not aiming for a 1-on-1, 1 to 2, because at least I'm always a little bit in profit. So that's all. If you just tell yourself that, I promise you're going to make way more. But it's when people start telling themselves like, oh, I want to make like 5,000. I want to make 10,000 on this one account or this month, Like if you just tell yourself, I just want to make my investment amount. I promise you, you will make it times 10, because you've already taken that pressure off. And also, once you start trading your funded account, you just have to stick to the plan. Like there's nothing that you can change. You just have to tell yourself that, because a lot of people like get psyched out when they're funded, or when they're like when they're on the verge of making money. So because at some point, like, sometimes they might feel like they're like, in a way it's like you're performing. You have to prove yourself that like you actually can do it, and you actually know what you're doing. But that's where it's like a true mental game, where it's like nobody knows what you're doing. Nobody knows what you're trading. It's all the only person that knows is going to be you, and you don't need to prove yourself anything. There's nothing to prove to me or to anybody. So that's also just another thing too, is like what I've noticed, that we experience a lot as, once we get funded. Some people don't experience that, but a lot of the times, like, people, they just get in their heads, and they just overthink it, because the markets are going to do what they're going to do. There's no telling. Nobody's 100% sure, and all you need is a decent win rate, and you just need to make sure that you're always in profit. Okay, you never want to be negative. So like, let's say you bought 5 accounts, okay, but maybe you're funded on another account. All you need to do is just focus on that funded, and then once you make your return, tell yourself, okay, this month I'm only gonna give myself $100 allowance to spend on any challenges. If you blow that account, next month only give yourself $100. Like, you have to be that strict with yourself. You have to be that strict with yourself, because it is a fine line with just treating these prop firms and these challenges like they're disposable. And unfortunately, if we treat it like that, it will be like that. So also telling yourself, I'm only going to give myself X amount to spend this month, that pretty much forces you to like get it together. And that's what I had to do, because I cannot be, I cannot get used to that, because if I fell into that trap, and if I got used to that, then that's where it's like, that's where you feel like you don't see the light at the end of the tunnel, and you don't treat it like a business. But if you just track, and it's gonna feel weird, and it's gonna feel ugly and uncomfortable, but you have to track how much you've invested, and just keep it small. Start with a little bit, because truly, if you had $20,000, even if you had $20,000, $50,000, you still could potentially self-sabotage it. So the idea of, oh, I don't have enough, I'm still working my job, or this, like, no, you can do it. You can definitely do it. You do not need to have crazy savings. You do not need to have a disposable income in that sense. You just, like Zeus said, you just have to start small, and take it day by day, and journal every single day. That is what's going to help you the most. But I went off on a little bit of a tangent, but these are just things that I've learned, that I've experienced, and that makes it easy for me. I cannot, if you have a loss, are those losses impacting you a lot? And everybody has different struggles with trading. Like, some people might not struggle with over trading. Some people, they just don't have confidence, and they don't have confidence when they take the trades. So then they need to focus on something else. So it's like, everybody's different, but nobody has trading 100% down right away. Like, everybody actually goes through the same thing. So yeah, I hope this helped you guys. I'm excited for the new week. I think this week will be a lot better. But as far as tomorrow, I do think that the market will be open until like 12, and then afterwards, I think it's going to be closed. But that's pretty much it. If you guys don't have any questions, just end it here. You're welcome, Alita. Thank you guys for being here and joining. Um, but yeah, I hope you guys have a good night. Of course, Suze. Bye, Brooke. Thank you guys, and yeah, this will be uploaded as well on YouTube. I appreciate you guys, and just take this night to relax and just remind yourselves that just take it day by day.